the commonest question that beginner investors ask is, where do I invest in? And everyone keeps telling you the same thing. Just dump your money in index funds, or they say mutual funds, and forget about it. But what if I told you that that is some of the laziest piece of advice out there? Not because index funds are bad in themselves, they are fine, but because you could be missing out on very huge opportunities by just following the norm, following everybody. Everybody says dump your money in index funds, put it in S&P 500 or some other index fund in your stock market. But did you know this could be a very big risk? Fortunately, there's a better way to answer that question, to make that decision. What should I invest in? And after tonight, it will be so clear to you when you implement it that you will never ask that question again. Where do I invest in? What do I invest in? So today I'm going to show you a smarter way to invest that actually fits you, not just the public advice that every guru gives you. Just put your money in index fund. If you have received that advice, that piece of advice before, say so in the comment section. Type yes in the comment section. Just pause and type yes. If you've ever heard put your money in index funds, type yes in the comment section. So that is lazy advice, as I'm going to show you. And then one of the things I need you to understand is that lazy investing equals lazy returns. Type it in the comment section. Remember, I always want you to type this because these videos are not just normal videos. They're actually coaching videos. They're actually hitting practically. They're actually addressing some of the psychological barriers that are keeping you from making progress in your finances. So when I say type something in the comment section, make sure you do it. It's part of the coaching exercise. It's part of the changing your mindset, the retooling and retuning your mindset for wealth. It's part of reprogramming your subconscious for wealth. So type in the comment section, lazy investing equals lazy returns. Take a moment and do that. And so you don't want to do lazy investing because you don't want lazy returns. And especially if you are the type looking to retire at 40 or looking to retire rich. Okay, so let's talk about why just put your money in index fund is lazy advice. It's lazy advice. I'm the one telling you that. But that's what you find all over the place. People talk about S&P 500. Put your money there. Just buy the whole market. And it sounds like good advice, but it's lazy advice. Now, I get it. Because index funds are very, very easy. And it's the most convenient piece of advice to give a beginner investor. They are very safe as well. So financial gurus love it. They love telling you, put your money in index funds because they don't have to think. And that is where the issue lies. That's what I'm trying to change. Because just put your money in index funds has a lot of implications. And the biggest implication is that you are not thinking. It shortcuts thinking. And investing, hello, needs a lot of thinking. It needs a lot of thinking. So now, but here is the truth. If you only put your money in index funds, here are some things you should know. Number one, you are trusting Wall Street. You are trusting their judgments, their winners and losers. And then many of them overvalued stocks. And then remember what happened to Enron. It was part of the index funds. So you're trusting them a lot. Yeah, even though you can say, well, index funds, they always, outperform, they always do 7, 8, 10, 12% and things like that. But it's a huge risk. Now, the second problem with just investing in index funds is that you are ignoring your goals. You are ignoring your goals. You should never entrust your dreams to index funds. You should entrust your dreams to your portfolio, to your asset. Type that in the comment section. You should never entrust your dreams to index funds. You should entrust it to your own portfolio. And I'm going to show you how to do that. So when you are only investing in index funds, you are ignoring your goals. You are ignoring your risk tolerance. In fact, Jeff Bezos said something the other day that I think you'll find very interesting. He said that it is human nature, it's default human nature to overestimate our risks and to underestimate our opportunities. Wow. Wow. Can you put it down? Put it down. Put it down. YouTube, everyone on YouTube, put it down before you listen to the next thing I'm going to say. It is human nature to overestimate risk and to underestimate opportunity. That's the problem. And see, because we are overestimating the risk, we say, okay, just put your money in index funds. But we're ignoring greater and bigger opportunities that are out there if you are open to it. Now, the third thing why just investing in index funds is not a very perfect idea. It's a good idea. It's a safe idea, but it's not the best idea. It's because you are missing chances to invest in what you actually believe in. Yeah, because you're just investing in the whole market. But there may be some other things, there may be some other things that you believe. There may be also some things in the market you don't want to invest in. Yeah, but you're forced in index funds to just invest in all of them. Now, so type this in the comment section. The S&P 500, which is the index fund, probably the most popular index fund in the world, doesn't care about your dreams. The S&P 500 doesn't care about your dreams. Your portfolio should. Your portfolio, when you look at your portfolio, it should reflect your dreams. Okay, so I took a look at my portfolio in one of my stockbroking accounts today. See, when I look at my portfolio, it gives me joy because I picked it myself. And this is something you miss in index funds. When I look at my portfolio, it gives me joy because my portfolio is a perfect reflection of my dreams. I understand my dreams better than the index fund, does. Are you getting this? This is really pivotal. This is really pivotal. So I looked at my portfolio today, and then I'm able to rebalance and make decisions on my portfolio based on what I'm going to teach you tonight. Very huge secret, and I guarantee you've never heard it anywhere else. And if you have, when I finish, just tell me that you have heard it anywhere else, and then I can give you like $10. Okay, I can send $10 or $20 to you. So I look at my portfolio, I look at my dream, and I'm asking myself, what kind of portfolio, what should I put in my assets that will deliver that dream? And I tell you, I took a look at it, and then index funds can't deliver my dream. They can't deliver my dream. And I remember a couple of things I did today, like in my portfolio in the stock market. I sold some, because if you buy, for instance, Dangote Sugar, I had Dangote Sugar. Dangote Sugar hasn't done well in recent times, but it's a very excellent long-term opportunity because Dangote Sugar had borrowed, they import the sugar raw material, from Brazil, and all these things happen in dollars. And then you see what has happened to the naira. The devaluation, the inflation has affected manufacturers, including Dangote Sugar. Seriously, it has even affected MTN. For those of you like me who have MTN stocks, we weren't paid dividends last year in MTN. We are not going to be paid this year as well. Okay, so what I did, there is a rising star in the Nigerian stock market, and it's called Aradel in the oil and gas sector. And so I rebalanced my portfolio today. I sold off my Dangote Sugar at a loss, and then I keyed into Aradel. So you see, I'm taking charge of my portfolio. If I'm doing index funds, there's no way I can do this. There's no way I can do this. I also, what else did I offload today? Because I actually zoomed in on Aradel today. So I looked at my portfolio. I looked at stocks that are not performing well at the moment, but they are very excellent long-term stocks. And then I sold them, and I took position immediately in Aradel. So do you see? That's not lazy investing. But you see, index fund is lazy investing. You won't be able to do this. So, okay, market, just do it for me. Take that decision, for me. Is this making sense to you? Is this helping somebody? Type so. Type it. Type value in the comment section. Okay. So now let me tell you the system. Let me tell you how to make smarter investment decisions, even if you're a beginner, no matter your level. So type how to make smarter investment decisions, even if you're a beginner, no matter your level. Okay, so that's what I'm going to tell you right now. And the basic thing which I need you to do is called investment philosophy. That's actually what I want to teach you tonight. You got to build an investment philosophy. So I'm going to take you through the steps, and then I will give you my own investment philosophy. It's got 7 or 8 steps. Would you like to have a list of my investment philosophy? You absolutely would love it. And then you're going to see in a moment why it's important to take time tonight and define your investment philosophy. It's going to answer that question anytime you ask, where do I invest? What should I invest in? It's a common question every day. What should I invest in? And people say, Mr. Obo, I have 10 million naira. What should I invest in? Somebody said the other day, not just the other day, I have 400,000 naira. Please, Mr. Obo, where do I invest it in? What do I invest in? All these things are taken care of by developing your investment philosophy. Philosophy is powerful. So it becomes a central organizing factor for your investment decisions. So you're no longer having to guess. You are no longer having to leave it to index funds to make the decision for you, but your philosophy does that. Fantastic. So instead of blindly following the crowd, you need investment philosophy. Everyone type investment philosophy. Take a moment. YouTube, everybody watching on YouTube and on Facebook, type investment philosophy. I want that to sink into you. Type it, and then as you're typing it, say it loud to yourself. Say it out. I might not hear you where you are, but just say it to yourself. Investment philosophy. Everyone say it. Investment philosophy. Now, how did it feel when you said that? Type in the comment section. Just saying it. Investment philosophy. Saying it out. And then typing it in. How did it feel? Let me know. That's empowering. This is a coaching session, and I am using some very sophisticated tools to embed these things in your mind so that you can practice them. So it's not just something you're going to hear and then go and sleep and do nothing about it. All right. So investment philosophy. So step number 1, I'm going to give you 3 steps. So step number 1, define your boundaries. Okay. So that will be your investment guardrails. Investment guardrails. Please type investment guardrail. You see, like if you're climbing a stair, you are climbing a pyramid, or you are climbing some very tall structure. So you have guardrails. The guardrails are the things you hold. Or maybe you go to, I think the Lekki Conservation Center has it, but there are some of these tourist places, you go, and then they build bamboos, or they build some rope or something across a massive bridge or something, a massive river or something, and then you're walking along it and then holding the guardrails. That's what your investment guardrails are supposed to do for you. Excellent. Yes, I can see that. Excellent. Tapa. Fantastic. Injideka. Yeah, Injideka, one of Africa's 1,000 unicorns. Absolutely wonderful. Okay, so define your investment boundaries. So ask yourself, number 1, do I only invest in things I understand? So it's got to be a guardrail. Do I only invest in things I understand? In other words, no crypto FOMO. No crypto FOMO. 9 out of 10 times when people have lost money, it is because they invested in something that they do not understand. If you lost money in crypto, if you lost money in crypto, anybody here, all right, everybody listening, if you lost money in crypto, type crypto loss. Type crypto loss. I lost money too in crypto. Not because there's anything wrong with crypto. Fantastic financial market opportunity. But I lost money because I didn't know what I was doing. So, do you invest in things you understand? That's a guardrail question. Do you invest in things, in companies that you use and that you believe in, that you align with their missions? That's a good question. All right. For instance, I use Apple. Everything around me, I use Apple. I don't know what Apple did to me. They just captured me. Every single thing. There's hardly any product that Apple has made that I've not bought. So now I use the iPhone, I use MacBook, I had Apple Watch. And I bought at least 4 when iPod was the thing. I bought at least 4 or 5 iPods. So if I believe in a company like that and I really use their products, do I invest in them? And I'm going to tell you why this question is so important. If you use Google every day, if you use Android phone, you use Samsung, doesn't it make sense that you should invest in it? Doesn't it make sense that you invest in companies that you're using their products and that you believe in them? I'm going to explain why. Just hang on. A few moments later, I'm going to tell you why that's important. And then, number 3, are you a long-term holder or are you a trader? You see, there's a difference between investing and trading. People mix both of them. Can you tell me in the comment section, what is the difference between investing and trading? They are not the same thing. They are not the same thing. In fact, I'm saying this for the first time. Every investment is a trade. But every trade isn't an investment. Okay? Type that in the comment section. Think about it for a moment. Every investment is a trade. But every trade isn't an investment. And the key difference between investing and trading is that investing is long term. Okay? And then trading is short term. I mean, some of you who do forex trading would probably understand this better, because when you do scalping, which is what is called, when you do scalping, within one day you can put in several trades using 1-minute charts or 5-minute charts or 1-hour charts, or even 1-day charts, but you are scalping. That is trading. And that's very, very different from investing for the long term, where you buy a stock, for instance, and then you hold it for 5 years, for 10 years. Their stocks are bought for my children when they were very small in 2000s, early 2000s. And those stocks have never been sold up to today. So that's a long term. So now, I just remembered Warren Buffett's, one of Warren Buffett's golden rules. He said, never invest in a business you can't explain to a 10-year-old. And that was what happened to me. I lost so much money in crypto. And do you know why? I couldn't even up to now, I can't explain crypto to a 10-year-old. Nothing wrong with 10-year-old. Nothing wrong with crypto. But if Warren Buffett said it, I'm going to listen to him. All right. So never invest in a business you can't explain to a 10-year-old. So that's a boundary, for instance. And Warren Buffett had so many such boundaries. Okay. Now, step number 2, filter out the noise. Okay. Kill the hype. See, because what your philosophy does, it helps you cut through garbage advice. I have been saved from losing millions. Because of my investment philosophies. I'm going to give you one of the examples. I lost millions. I lost $100,000 as I was living Shell, family savings, because I didn't have investment philosophy at the time. So I carried that money, dumped it in Nospetco, and then Wealth Zone. Weeks later, the SEC said, oh, those are wonder banks. Since 2007 till now, I have not seen a cent, $1 out of that money. If I had investment philosophy, I would never have lost that money. And then all the money you're losing is because you don't have investment philosophy. And if you do, you do not follow it. So when people come, oh, this stock is fantastic. This stock, oh, he's doing this and all that and all that. Now, the question is, does it fit your rule? If it doesn't, yes, let them go ahead. It's okay for people. It's okay to allow people to make so much money They can make money, yeah, whatever. Let them make their crypto money. Let them make the, I know people who became real multi-millionaires in dollars from crypto. It's okay. But that they are making millions in crypto does not mean that I should suddenly jump into crypto. That's a mistake that many of us make. Because you don't have your own investment philosophy. You see that somebody, we have this big challenge. I don't know what countries, some of you are watching from. Kenya, Zimbabwe, Gambia, Fiji Island, different places. So I don't know, of course, US, UK, Ghana. I don't know how it works in your country. But what happens in many parts of Nigeria is that if someone in the neighborhood starts a business, let's say fish farming, or maybe the person starts mini import from China to sell, within 2 weeks, everybody in that estate will start doing fish farming. Just following the crowd. That's what happens when you don't have your own philosophy. So somebody might actually make millions doing that fish farming or doing that mini importation, from China. And then you put your hand in it and it fails. Why? Because you did not follow your own rule. Okay? Now, you have some current ones like, everybody is buying AI ETFs. Do you hear things like that? AI. But do you get how they make money? Do you understand it? Okay, AI ETF, can you explain it to a 10-year-old? So, your investment philosophy helps you to keep the hype down. Because you really need to take control of your emotions if you are to do well. So now, if the crowd is screaming, buy, your investment philosophy whispers, why? They rhyme. That's a perfect thing to type, okay? Type it on YouTube, Facebook, type it. If the crowd is screaming, buy, your investment philosophy whispers, why? That is what has saved me from losing more money than I've already lost in my life. When everybody's screaming, buy this, AI, this and that, and whatever, my philosophy says, why? Okay, and I've got to answer that why before I invest, okay? Step number 3, automate your decisions. When you automate your decisions using your investment philosophy, there's no more overthinking. Overthinking is the enemy of investing. We overthink. And then many times, when we overthink, we actually make mistakes. All right? So investing isn't about picking stocks. It's about picking yourself. Investing is not about picking stocks. It's about picking yourself. So now, when someone says, should I buy Tesla? You don't panic. You just ask, does this fit my philosophy? If yes, how much can I risk? Then ignore everything else. Do you see that automation? So somebody comes and says, buy GT Bank, buy Zenith, buy Nvidia, buy Tesla stocks. And you say, okay. So don't panic. Ask yourself, does this fit my philosophy? Question number 1. If it doesn't, throw it away. If it does, then go to question number 2. If yes, how much can I risk? Very important. How much can I risk? Then, after you've answered that question, ignore everything else. Ignore everything else and then, So, why do you automate? Because the less you decide, the more you earn. I think I've been dropping some bombs. I've been dropping some bombs. Really, the less you decide, the more you earn. Like the Guardrails I bought today. It's a decision I had made automatically. So, and then selling these things, selling my Dangote sugar. So now, it fits my rule. And that decision was automatic. I can enter Dangote sugar later. But right now, there's an opportunity I want to position for. And so, what do? Rebalance my portfolio. Take from the ones that still, maybe Dangote sugar will do well. Maybe in another 1 or 2 years. Because they are investing. They're investing in Ogun State in new machineries and new sugar refining facilities. They're massive ones there. So I'll position. I'm studying the market. I'm listening. So at some point I can go in there. There's also something about my philosophy. I do not use sugar. So I was also asking myself, should I actually be keeping, that stock? Well, I don't use sugar. I don't do soda either. For nearly 25 years, no soda, no sugar, no malt, nothing. And so I should be asking myself, if I'm not using it, if it's something I don't use, should I actually be investing in it? All right. So let me give you 1, 2, 3, 4, 5, 6, 7. All right. So let me give you the 7 points of my own case study, my own investment philosophy. Would you like to know my philosophy? Because I developed this over years after losing so much money to scams, to fraudsters, to all kinds of investment frauds. I said, okay, Obo, sit down and define a philosophy, define a boundary as to how you are going to approach this investment matter. Otherwise, scammers are going to deal with you. So here are my 7 or 8 point investment philosophy. So number 1, and you can make note, you can also go back to replay this video. You can always go to YouTube to watch the replay. Invest in my mind daily. Invest in my mind. And then if I want to do anything, like I'm revisiting Forex, I got into Forex for the first time in 2007, 2008. I abandoned it when it became very clear that Forex shouldn't be like what you are starting career with, because I had just left Shell, and then my business was not doing well and I wasn't having any regular income. And so to add Forex on top of it was crazy. And then on one occasion, I saw $500 disappear, and then that account just got burnt. And I said, no, I'm not ready for that. I have children, I have a wife to feed, I have school fees to pay and things like that. So I left Forex. Now I'm investing a few minutes every day, reading a little bit more about Forex. I have also opened an account, so not just a demo account. I also opened an account and put a little money there. I just put $100 there. Practice, use to learn, invest in my mind daily, because the money is not made in the market. The money is made in your mind first, and then it is made in the market. I just gave you something, something incredible. The money is not in the market. The money is in your mind. Everybody type, the money is not in the market. The money is in my mind. The money is not in the market. The money is in my mind. That's why it is. So that's why the first step in my investment philosophy is to invest in my mind daily. Number 2, I own everything I use daily. So I invest in the things I use. Why? Because I don't want to be a renter. I want to maintain the owner's mindset. Okay? I want to maintain owner's mindset, not to be a renter. So, because I use the banks every day, I own the banks that I use. Okay? I own the banks I use. I own First Bank because I use First Bank. I own First Bank. I own shares in it. I own GT Bank. I own UBA. I own Zenith. Every bank I use, and I must use, I own it. Why? Anytime they charge you the fees that you're complaining about, instead of me crying, I make the money. Number 3, deploy my income as my employee to work for me. So I see every dollar, every naira that comes into my account as my employee. Every dollar is my employee, and I deploy them to work. Number 4, play in the financial markets as opposed to labor markets during the financial fitness challenge. By the way, if you have not enrolled in the financial fitness challenge, what are you waiting for? Can you imagine what you're getting for free? How much more when you come into that group, of my mentorship. So find the number to register in the description of this video, and then register now. There's an early bird offer. The fee is 125,000 Nigerian naira, or $125 if you're paying from outside. But we are doing 105 naira now, 20,000 naira off. So take advantage of it now. So you can DM me right now, even as you're listening, that I want to enroll. Send me payment information. Just say send me payment information and I'll get that to you. Okay? All right. So play in the financial markets. That's number 4. Number 5, flee from every appearance of get-rich-quick schemes. That's my philosophy. When somebody tells me, oh no, oh, but if you put in this 1 million naira now, I guarantee you that in another 2 weeks it's going to become 15 million. Oh no, you've lost me. I sprint very well. I'm very, very sporty, athletic. So by the time you finish, I'm already like 1,500 meters away from you. All right. The other one, be patient. Play the long game. There have been times I will buy a stock. Which stock did it happen? In fact, it happened to me in Guardrails. I bought Guardrails at 560 something, a lot of it. And then, just a few weeks, like 2-3 weeks after I bought it, Guardrails came to like 515. Today is 500. But I bought at 560 something. So sometimes people just panic. Oh, you bought a stock at, $10. And then it falls to 9, falls to 8, falls to 7. You panic. You go and sell at 7. And then 3 months later, that stock becomes 30 naira or $30. Has this happened to you? If it has happened to you, say so in the comment section. So because of it, I'm patient. I play the long game. So I bought Guardrails at 560 something. Guardrails is 500 today. I do not care. I'm playing the long game. In fact, I bought more today. I'm actually doing dollar cost averaging. So I bought more at 500 today. So it's actually bringing my average cost a little down. All right. So the other one, control my feelings and emotions during ups and downs. So that's my investment philosophy. So I love the scripture in Isaiah 26:3. He said, you will keep him in perfect peace, whose mind is stayed on you because he trusts in you. So I trust in God. He's got my best interest at heart. If he goes up and goes down, I do not care. As long as I've made my decisions based on my investment philosophies, I will not panic. Okay? So, just to recap, index funds aren't wrong, but they are not the whole answer that gurus give you all the time. It's not the whole answer. So if you want to invest smarter, not lazier, you need an investment philosophy so that you can make some better decisions. So right now, pause the video, open your notes, write down one investing rule you will follow from today. Okay, and then you can continue watching. That's for those of you on YouTube. And then you can type it in the comment section. What is one investing rule that you're going to follow today? Drop it in the comment section, and then I will reply to the best ones. So in the comment section, drop one investing rule that you're going to follow from today. Okay? And then if you're ready to stop following the crowd, join the Financial Fitness Challenge right now. So the details are in the description of this video. And then I'll be looking forward to meeting you, to knowing you, and to helping you achieve your financial goals, and to help you to define your investment objectives and then the path to getting there. Whatever happens, keep showing up, because you have no idea what's coming your way next. See you same time tomorrow. Good night.